Listen, we are witnessing the birth of the greatest wealth transfer in our lifetime, and most of you are staring at the wrong screen. It is Tuesday, January 6, 2026, and silver just tore through $78 an ounce. This isn't just a rally. This is a global energy and monetary war. While you were sleeping, the silver market fundamentally broke. Between the U.S. capture of Maduro over the weekend and the new manufacturing PMI data showing economic unease, the animal spirits have moved into hard assets with a vengeance. But the real shocker? China just pulled the trigger on a silver export ban, weaponizing 60% of the world's refined silver overnight. This is the great squeeze I warned you about. If you are holding paper contracts, you are about to get slaughtered. If you are holding the real metal, you are sitting on a 2026 gold mine. Most people on YouTube are talking about charts. I'm talking about survival. We are seeing a $6 premium for physical silver in Shanghai right now. Do you know what that means? It means the world is running out of the actual metal. Stay with me, because I'm going to show you the wealth secret that could 3x your portfolio in 2026 while the rest of the market burns. Let's go. Before I pull up the supply-demand charts that will blow your mind, I need to know, are you a victim or a shark? If you want the cold hard truth that the mainstream media is too afraid to tell you, smash that subscribe button right now. Kevin Strategic is the only place where we look at the intersection of geopolitics and your actual wallet. We are building a community of strategic investors who don't just hope for the best, they plan for the worst and profit from the chaos. Hit the bell icon. Join the tank, because in 2026, if you aren't early, you're extinct. Now, let's look at why China just changed the game forever. Look at this. Starting January 1st, China implemented strict new export licenses for refined silver. They control between 60% and 70% of the world's refined supply. By blocking smaller exporters and requiring massive credit lines, they are effectively nationalizing their silver reserves. Why? Because they know what you don't. Silver is the new oil. It is essential for everything in the green transition, from the massive solar arrays being built in the Gobi Desert to the AI chips powering the Hang Seng rally. China is mirroring its strategy with rare earth metals from years ago. They are choking the global supply to ensure their own industrial dominance. We are already in a structural deficit for the 5th consecutive year. We are missing 200 million ounces a year. That is the entire annual output of Mexico. You cannot print more silver. You can't just mine more, when 70% of it is a byproduct of copper and lead. This is a perfect storm of policy and supply. If you don't understand the power logic of the multipolar economy, you don't belong in this market. This is the most important chart you will see all year. The price of physical silver in Shanghai is trading at 80 plus, while the COMEX paper futures are lagging. This is a bifurcated market. One world has the metal and the other world has a piece of paper that promises the metal. Which one would you rather have when the COMEX inventories are down 70% since 2020? Lease rates are hitting multi-year highs. It's getting harder and harder to borrow the metal. This paper market manipulation is ending because the industrial users, the solar companies, the EV makers, they don't want a settlement check. They want the physical conduction of silver for their products. When the smart money demands delivery and the vaults are empty, that is when you see the force majeure price shocks. Do not be the person holding a paper contract when the music stops. I only buy what the world needs. And right now the world is addicted to AI and solar. In 2025, solar panel and EV demand for silver jumped 20%. New, more efficient solar tech requires even more silver per cell. By 2030, solar demand alone is expected to double. Then you have the AI supercycle. Data centers are silver intensive. Advanced semiconductors are silver intensive. This is structural demand, it's not cyclical. Unlike a luxury watch or a fancy car, these companies must buy silver regardless of the price because there is no easy substitute for its conductivity. This makes their demand price insensitive. When you have price insensitive buyers chasing a disappearing supply, the price doesn't just go up, it explodes. We are skating to where the puck is going, and the puck is going into a silver-backed digital and green future. Let's look at the signal versus noise. Over the weekend, the U.S. took out Nicolas Maduro. The geopolitical risk premium just hit the roof. When there is blood in the streets and regime changes in oil-rich nations, investors flee to safety. Silver is the ultimate safe haven right now because it's outperforming gold in the haven ratio. Trump is already signaling more military action if the transition doesn't go smoothly. Uncertainty is the mother of all rallies in precious metals. While the talking heads argue about politics, I'm watching the wealth secret. Silver is still the most undervalued asset on the planet compared to gold. The gold to silver ratio is compressing from 80 down towards 68, and some analysts see it hitting 15. If that happens, you aren't just looking at $100 silver, you're looking at a generational wealth event. Here is something the masses missed. The U.S. has officially designated silver as a critical mineral. This is a geopolitical chess move. It means the government recognizes that without silver, our defense and energy infrastructure collapses. This designation triggers aggressive stockpiling. We are seeing massive volumes of silver flowing into COMEX-linked vaults in New York, draining the London hubs. Why? Because the U.S. doesn't want to be at the mercy of China's export licenses. We are in a resource cold war. When governments start fighting over a metal, the retail investor who got in early wins. Are you positioned, or are you going to wait until it's $150 and FOMO into a top? Don't be that guy. Let's talk about the targets. Alan Hibbard and other analysts are now seeing a path to $100 and even $175 silver in 2026 as the supply deficit deepens. From a technical standpoint, we've broken the 45-year resistance at $50. That $50 is now the floor. Fibonacci extensions are pointing to $88.99 and then the psychological $107 mark in the coming months. This is uncharted waters. When a commodity breaks a 40-year high, it doesn't just stop. It runs until it finds the true value. Given the currency debasement and the rising debt levels in the U.S., the real value of silver is much higher than $78. I'm allocating between physical, miners, and ETFs to capture every angle of this move. Here's the bottom line. Silver is the ultimate wealth secret of 2026. We have a supply crisis, an industrial explosion, and a geopolitical meltdown all happening at the same time. You have two choices. You can be a victim of the great squeeze, or you can be a strategic investor who sees the opportunity before the headlines. Stop buying liabilities. Stop holding dying currencies. Move into what the world needs. I'm going live again tonight to track the Asian market open. If Shanghai hits $85, the COMEX is going to break. Hit the like button, comment, silver squeezy below so I know who's in the tank with me. I'll see you at the opening bell. Don't get slaughtered out there. Get rich.